The US dollar is trading broadly steady heading into the North American session after this week's softer than expected US CPI and PPI reports prompted markets to scale back expectations for further Federal Reserve tightening. However, the downside in the greenback has been limited by a renewed rise in US Treasury yields, with investors increasingly focused on the inflationary implications of elevated energy prices as tensions between the US and Iran remain a dominant macro theme. Risk appetite has softened after a brief post-inflation rebound, with European equities trading lower and U.S. equity futures pointing to a weaker open. S&P 500 futures are modestly lower, while Nasdaq futures are under heavier pressure as technology shares continue to lag. Higher long-end treasury yields, coupled with lingering geopolitical uncertainty, are weighing on broader sentiment despite the more encouraging U.S. inflation backdrop. In Europe, economic news has been mixed. The UK economy expanded modestly in May, supported by a rebound in the services sector, though the data did little to alter expectations for Bank of England policy. BOE Deputy Governor Breeden reiterated that policymakers are in good position to monitor incoming data, reinforcing the central bank's patient approach. Meanwhile, the Eurozone's made trade deficit widened to its largest since early 2023, highlighting the region's still fragile external sector and offering little additional support for the euro. Elsewhere, the Swiss National Bank published meeting minutes showing policymakers see inflation pressures as broadly unchanged and monetary conditions as appropriate, providing little indication of any imminent policy shift. In commodities markets, oil prices remain near weekly highs despite a modest pullback, with traders continuing to price geopolitical supply risks after fresh warnings from Iran that the conflict could broaden if U.S. military action persists. Elevated crude prices remain an important source of inflation risk for global markets. Looking ahead, the primary focus for the North American session will be the U.S. retail sales report, which will provide an important read on the resilience of the U.S. consumer following this week's softer inflation data. Beyond the economic calendar, investors will continue to closely monitor developments surrounding the U.S.-Iran conflict, with any escalation likely to have an outsized impact on oil prices, inflation expectations, bond yields, and broader risk sentiments. That's all for now.